Hey traders, Raghee here. Happy Monday, everybody. Glad to have you here. Welcome to another episode of Charts and Coffee. Where is my coffee? All right, rocking a little bit. What are we doing today? I'm back to my Ethiopian medium roast, so good way to kick off the week and great time to take a look at what we have coming up this week. So before we get into the charts, quick reminder that we want to always be in tune with the economic calendar. Now, remember, it's not only the economic calendar right now for just the regular events that we have. We have a number of bank holidays. So I do want to remind everybody that as we come out of the Easter weekend, there's going to continue to be bank holidays into Monday. So we don't have full participation in Europe. So that action that we typically inherit from the 2 a.m. open is not going to be, that liquidity, that attention is not in play today. So be careful. It is a holiday affected day, both out of Europe and the UK. We do have the ISM services PMI today, which is not as important as the manufacturing, but they're both numbers to keep an eye on. As long as they're well above 50, the market usually doesn't care, but keep an eye on that on a rate of change basis. All right, next up is we've got, well, I'm going to scroll down just a little bit. We have a little bit of FOMC member speak, and then, of course, we have the minutes on Wednesday. We'll talk more about that tomorrow. So just a quick reminder, you want to take a look at that economic calendar Sunday night, Monday morning, know what the market is going to deal with today, and then know what it's going to be having to discount going into the coming up, the sessions that are coming up. The other calendar that we really have to be very aware of is our earnings calendar. So I'll use Estimize or Earning Whisper. Either one of those are fine in terms of just a calendar. I like the Estimize because I can curate the ones that I want to keep a particular eye on. So again, remember, those earnings calendars are going to be really, really important. And let's see, I guess that's about it in terms of just sort of kicking off the day. Great to see everybody. Let's go right on over to our questions, shall we? All right. James Harris, how you doing, James? Quick question about day trading. Sure. When choosing my expiration, can I use the same day expiration instead of using this Fridays, since I plan to be done by trading at 11:30? So yes, I mean, and I get this question about expiration. Can you use, for example, last week, we used the DIA that was expiring that day when we did the day trades on the Dow using the DIA ETF. So yes, you can. The only reason I like to go out a little further is, especially in a market that continues to head higher, it gives me a little bit of latitude to, if I want and we have strength into the close, I can carry on a little bit longer without the expiration, right on my heels. However, the other thing to consider, it's okay if you want to go SPY or SPX. If you want to go QQQ or NDX, that's fine. There's more liquidity and size on the SPY QQQ side, but yes, you can absolutely do that. Sure. All right, next up, happy Monday. Yes, happy Monday to you too. With the overall market extended and hitting all-time highs, I don't consider it extended unless it's parabolic, but I hear you. If you find a trend setup that is a good entry point, would I still take it or wait for a pullback of the overall market? Stock options and more, I'm always going to wait for a pullback. There is one exception to that, and that is the 1, 2, 3 pattern, the pattern of my youth. We talked about this one in Walmart, I think last week here in Charts and Coffee, and I think we also talked about it in the Sector Secrets Mastery as well. And that's this little pattern right here, where it's actually not a pullback pattern. It's a reversal pattern, and you're looking for the market to, break a swing high. And that's pretty much what we had here. You can see where we are right now. You're looking for the market to break a swing high, and that swing high is right across here. You can see the Darvis hanging out in there. So with that in mind, that's the only time that I won't wait for a pullback, because I'm actually waiting for a previous downtrend to put in this reversal. I'll show you what it let me give you a little bit another look at it, because I know a lot of people are familiar with this pattern. If you're not, familiarize yourself with it, because it is at the heart of Dow theory, gang. This is Dow theory 101 kind of stuff, and this is what the pattern is. It's very cool stuff in that what you're looking at is actually a trend reversal, right? When Charles Dow talks about accumulation, distribution, markup, markdown, if you study Wyckoff, that's you're probably going to be along the same path. I think Wyckoff basically, created what they did off Dow's work, and so I just stick with Dow. But again, if you're a Wyckoff fan, that's perfectly fine. You're gonna notice these patterns. So unless we're forming one of these reversals, there's another one that I'm looking at. For example, I'll show you here. This is one we'll be talking about in the sector secret, CPRT. Same idea. That 1, 2, 3 down there. Okay. All right. So thank you for the question. So most of the time, the answer is going to be resounding yes on the pullback, my friend. But sometimes I will wait. Okay. Hey there, Alex. Good morning. Can I take a look at PM? Looks like no one has quit smoking. Philip Morris and Altria are interesting names, Alex, because these are names that are not only interesting for us on a trading basis, but they're also interesting on an investing basis, because now we start talking about dividends. We start talking about the benefits of buy and hold in stocks that will pay you. So especially Altria. Do I like the trend here? Gosh, yes. Double green MACD, well above the mean, not sitting at a mean high where I think that the market could be reverting back suddenly. I mean, this is a good, nice looking chart, and it is pulling back into the wave as we like here. So I do have on my watch list that I'm going to review in the sector secrets room. Philip Morris is on that list. And you also want to work backwards from that. So what else would be in play? You could look at Mo as well. Philip Morris is in the zone. Mo is not, but we like them both. You got it. Good stuff, Alex. Wells Fargo, WFC. Look, I think the XLF and the KRE are two sectors. Your regional banks and your financial sector ETFs are going to continue to benefit from this current environment. I love both of them. They're going to do fine even with this 10-year bond moving higher. I think a lot of people got a little spooked about that with financials, but that is not historically based at all. These particular stocks are going to continue to do well with the current, the current path that the Federal Reserve is on with their monetary policy. And if that will change, it's going to show up first in Fed Fund futures. So, I've been keeping an eye on those Fed Fund futures via the CME. They have a great site that basically decodes all the gobbledygook of the Fed Fund futures to show you what the probabilities are for different expectations of rate hikes or holds. So that is what I would keep an eye on probably most with regional banks and with XLF. WFC, we're just waiting for pullbacks like we've seen back on the 25th and on the 29th. Remember also that KRE is going to be tethered in some way to the Russell, and XLF is going to be tethered to the S&P. So sometimes if we see volatility in the broader averages, there might be opportunity there. All right. What industry do I target? Bullish. What industry do I target? So Glenn, right now, I would tell you if I'm looking at industries, gosh, I mean, anything tethered to the Dow is an easy one. I would say, it's kind of, if I understand your question, Glenn, just broadly speaking, anything right now tethered to transports, industrials, and generally speaking, the Dow. Yeah, that's what I'm favoring right now. Now, if I want to get a little bit more segmented, we've been talking for ever since the end of February, where we started going into DHI and toll. We started doing that at the end of February. So home builders, construction, keep an eye on the 30-year. Look, the Federal Reserve is absolutely dedicated to doing what they need to do to keep the longer end of the yield curve down. So as long as they're doing that, we see housing starts, we see existing home sales moving higher. It's hard not to assume that's going to continue to trickle down to construction and home builders. So that's a big part of what I've been looking at as well. Matthew, good morning. Do I like the multiple day squeeze and pullback in HCHC? All right. So squeezes are typically going to occur in a yellow environment. So the difference between when I will look at a squeeze, so this is really important, gang. So we have two very popular, simpler trading indicators. The squeeze, which is our flagship indicator. It's an indicator that John created. And ready, aim, fire, which is another very popular indicator and one that Mr. David Starr created. And so one is a market tool that allows you to take advantage of compressed markets. We don't call it the squeeze for nothing, right? It's a squeeze market. It's a compressed market. It's a market that's being slow. It could be a triangle. It could be a channel. So you want to see a narrow range. For me, I'll use historical price movement ranges to identify what narrow is, because now I'm getting into sort of the historical volatility, the numbers of it. So however it is that you identify a market that's found a range and is stuck in it, that is where you want to focus on a squeeze. And I agree, Matthew, this is a market that looks to be stuck in a range. Then you want to at least differentiate from a distribution market, which would be a wider range and a lot of back and forth. So that wider range, ready, aim, fire, that narrower range squeeze. You make that shift alone, it will make a sea change in the way in which you trade sideways markets. So do I like a multiple day squeeze? I mean, look, it's a $4 stock. So for something under 20, Matthew, I'm going to add another variable that I look at, 4 factors: price, time, volume, volatility. Volume is going to be the factor here. So I need to see this leave some under $20. We could talk about technical analysis all we want. It's a volume game. So we talk about these low price stocks. It's absolutely a volume game. I would be long. We've bounced off the mean. Green MACD, like you said, stuck in a range. Let's escape some volume ledges or rest off a volume ledge. And you're probably looking at some more upside there. And I know nothing about HC2 holdings. This is straight up a technical and volume analysis. We're above the 55 EMA. I mean, there's a lot to like about it to the long side. All right. Next up, do we have a gap fade today? Well, let me show you something I do. And I'm going to log in. Let's see if it'll let me do this. So for those of you that notice, I use the TradingView charts. What I'll do is log in. Let me just refresh this page to TradeStation. I'm a big fan of TradeStation. Good data, great platform. And so once I log in, now I've got access. You need an account with TradeStation, clearly, okay? I don't know if I made that clear in the past. There's two, by the way, I'll show you here. There are two, I guess I can't here. All right, so what I'll do is I'll make sure, and by the way, I won't trade through TradeStation. So if you're on TradeStation, use your non-live, because I won't trade live through Trade. I'll still use either my app or my TradeStation web app to use this, because I do so much other things on this. I don't want to inadvertently put on a trade. So I'll go live on, say, the web platform on my phone, and I'll use the non-live on, or the demo on for the data, and it works perfectly fine. So what I want to do is put some live data behind it so I can look at what's going on underneath the hood, if you will, especially when it comes to futures, because TradingView, you don't want to have to pay those exchange fees all over again, right? Okay, so that's a little background. I got a lot of questions via text and email about, Rock, how did you hook up to TradeStation? You do need an account. You do need an account. I've also hooked up my Alpaca account to this as well. Anyway, there was some concern as to how much that Archegos, look, those of you that haven't followed the Archegos saga, this is why I call big money, never call big money smart money. All those jerks making fun of kids making TikToks, none of those TikTokers, yes, they might be young, but, and they might make ridiculous videos, but none of them have blown up $100 billion on bank money. Look, never call big money smart money. You just got an example of that with that knucklehead from Archegos. So here's the thing. Was there concern that maybe we'd see another unwind coming into this week of that? I think that's pretty isolated. A lot of Chinese stocks, clearly Viacom. This guy made markets in certain places, and we could have an episode dedicated to Archegos. It's not that interesting, but it is interesting how absolutely stupid the banks can be, or how reckless really they can be just to take those transaction fees. Yes, it makes me crazy. But here we are again dealing with another hedge fund blow up. All right. With that being said, there was concern that there might be a little bit of an unwind, which is why I recommended pay yourself while you can, not when you have to, which is why we scale in and scale out of trades. Do I like the fact that we've broken through this 1, 2, 3 that we've talked about? Look, that's fine. But the place that I recommended folks get long the NAS was at the bottom end of the range, down near these 2 Darvis levels. So this is nice follow through. We've been bullish to market. I'm going to continue to look for more upside. Just be really careful in terms of tech, but it's come on really strong. So we'll see a nice move again here this morning. Is it a gap up? Yes. Would I fade this? Look, the fade, gang, is a day trading strategy. It's not that I want to short this to see it make a 50% retracement of this last major move. What I want to do here is just pull up a 1-minute chart and look for maybe the first 5 to 15 minutes to show some weakness and possibly set up a long. So really what I want to do is switch it over to a 1 minute, see if we're in a lot of volume and see if we can't pull back to a V-score low. And I want to get long on a pullback for that. Okay, so I hope that makes sense. What site do you find that it's the CME, Glenn? Just search, go into Google and search CME Fed Funds and it'll come up. It's their FOMC countdown. You can search that too and it'll come right up. Okay, so let's see. Do I have a problem with SPX 0 days expiration trades? Mike, if they're day trades, I don't have a problem with that at all. What do I think of the VIX at this level? I know it's probably going to sound like heresy. I'm not glued to the VIX. I like looking at volatility. Clearly, we can look at the volatility of oil. We can look at the volatility of gold. We can look at the volatility of the markets in that regard. I haven't really done a lot of breakdown on the VIX as of late because I know I want to be long on pullbacks. I'll look at the VIX more if I'm uncertain about which way the market wants to go. So it's really more for me, the VIX is going to be important, not as a constant, sort of barometer, but at certain inflection points, I want to know where the VIX is sitting. So that's what I'll use the VIX. Elder asked, do I hedge? Never. I'm doing my best. Michael Caine from Batman. Never. I don't believe in hedging for trading. Not even a little bit. All right. Mark asked, during the pandemic, I will not trade spot Forex on Monday. Mark, only slightly less so than Friday. My least favorite trading day is Monday. However, Mondays are tradable, but I will be very cautious. And this particular Monday, Mark, to your point, for Forex, yes, I don't have any Forex day trades going on this particular Monday because when Europe and the UK are closed, that is almost 40% of that massive multi-trillion-dollar turnover in the FX market. So I am 100% with you on a Monday where we have bank holidays really in the center of the Forex universe. I'm with you. You might find some opportunities in the US Open, but I would focus on those types of currencies like your yen or your Aussie or your loonie that are going to be sensitive to commodities and risk appetite or risk aversion in the US. But I'm with you, and I absolutely would do next to nothing after 11 a.m. Eastern as we go into lunchtime doldrums in the US. So I'm with you. What do I think about semis? Gene, actually, I do like semis. We've got 1, 2, 3, 4, 5 names in semis. 2 of them are 1, 2, 3s that I showed you all before. And the other 3 are trends. Think Intel, think AMAT, think Texas Instrument. So I do like SMH very much, but I'm not going to play SMH broadly because it's not in a trend, right? But what I will do is look at the individual stocks. For example, I mentioned Texas Instrument. These are a market that would make sense where they are relative outperformers. And Texas Instrument just went double green 2 sessions ago. So pretty exciting. We're going to be very selective going back into tech. Now, I ditched tech in mid-February. Tech ditched me. Tech ditched most of us, right? So what did we refocus on? Reflation trades and being much more specific about consumer discretionary stocks. GM, Ford have been very good to us. Focusing on energy stocks, focusing on industrials like RTX and GE. So yeah, looking at this list here, we got a good list going into April. And I'm very optimistic about April. We've been talking about that ever since getting through the end of March. All right, so gang, let me wind it down here. We've got the open here in 8 minutes. So as always, thank you so much for joining us for Charts and Coffee. We'll be back tomorrow, as always, answering questions, taking a look at what's moving in the market. Thank you for being here. Smash that like button. And after you smash the like button, if you have a question or a comment or want me to cover a certain topic in an upcoming episode, leave it there. I do check it out. And I'll see you tomorrow. Be good to each other.